Hey everyone, welcome back to the channel. Going to take a little pivot this week and we're going to look at some healthcare companies in the coming week. We're going to start with Bristol-Myers Squibb, also known as BMS. Pretty interesting company. Current stock price about $67 a share roughly, equating to a market cap of about $147 billion. And something to note here in that key stats section, if we look at the revenue from 2018 to 2020, right, it looks like it's about doubled. There's been a lot of growth here from an acquisition they made, a couple of them, Celgene, and then they also acquired Myocardia. So if we look in that recent acquisition section, they acquired Myocardia at the end of 2020 for 13.1 billion. And then along with that, in 2019, they acquired Celgene for 74 billion. And that was, I think, like the fourth largest acquisition of a healthcare company, pharmaceutical company, is what I was reading. So they've made some really big acquisitions in recent years um, to really kind of help grow the revenue. So a little bit about BMS, if you're not familiar, they're a drug discovery, development, licensing, manufacturing, marketing, distribution, and sales company on a global basis. Primarily competing against worldwide research-based drug companies. So think of other large pharmaceuticals like Pfizer, things like that. And they primarily sell to wholesalers and distributors. And they do sell a little bit to retailers and hospitals and clinics, but that's to a lesser extent. And then of their revenue, 81% of it is made up from just 5 brands, so really 5 drugs. I've outlined the 5 drugs here, and we'll definitely take a deep dive in this when we do the valuation. But Revlimid is their number one. Elquid, Opdivo, Orencia, and then Pomalyst/Imnovid. So a lot of fun names here. Feel free to read about it, but those are their top 5 drugs, and those 5 products make up 81% of revenues. So let's go ahead and hop over and let's take a look at their WACC. So pulled their WACC together, right? So market value of equity, that 147 billion. Debt, pretty interesting. They give us a lot of items on their debt schedule in their 10K. It's page 100 if you want to go look at it, but they tell you the year of the note, how much the carrying value is, and then the interest rate. And then from there, we can calculate kind of a weighted average. So they have about $50 billion of debt at 6.5%. Oh, actually, ooh, that's a typo for sure. Let me correct that real quick, and that is definitely not 75%. That's probably 0.75%. Okay. Let's see. About 50 billion of debt at 3.5%. Apologies there. So, pretty cheap cost of debt relative to cost to equity, and 50 billion. So, I mean, if we look at that WACC, right, that means this is the first company we've seen where kind of a quarter of their enterprise value would be from debt. And, obviously maybe they have some cash in here, so enterprise value might be a little bit less than these two combined. But usually what we've seen on a lot of these companies we've looked at is pretty low debt amount. So this is pretty high debt. My guess is a lot of this is probably in relation to their recent acquisitions, right? A $72 billion acquisition and then a $13 billion acquisition. So in the last 2 years, they've done about 100 billion of acquisitions. I'd imagine they took out a fair amount of debt for that. But anyways, from there, we actually get a WACC of 5%, roughly 4.8% there. And beta, you can always check the beta, just make sure we're kind of Yahoo Finance saying 0.62 beta, we're getting 0.58, so we're pretty in line there. So feel free. In my other videos, I go over how to calculate the beta. You just got to pull some data off Yahoo Finance, drop it in, and the rest is done for you. So about a 5% WACC, so not a super risky company, makes sense, large pharmaceutical company. I think there might be some more risk in there, but that's just me being a little bit more risk averse, thinking that especially in the pharmaceutical industry, 80% of your revenue is from 5 drugs. If a generic comes out, patent expires, anything like that. So we'll take a look in that when we do a DCF. But yeah, this is part 1. Be a 3-part series. The next video we'll look at revenue, and then we'll pull it all together in a finalized DCF to get a valuation. So let me know if you have any questions or comments below, and I'll get back to you. Thanks so much.